You know that feeling in crypto where it seems like some people just know what's going to happen before anyone else? Well, today we're going to pull back the curtain on that. We're talking about smart money, what it is, why it's so incredibly powerful, and most importantly, how you can actually follow its moves to get a real edge.
Have you ever been there? You're staring at the charts, a random coin just starts to pump out of nowhere. And then, hours or maybe even days later, some huge news breaks. It feels like someone had an inside track, right? Well, that's exactly what we're digging into today.
And this quote right here, this is everything. Think about that for a second. The most influential players in this space, they're not just surfing the market waves like the rest of us. No, they're the ones making the waves. Understanding that difference is your first big step. All right, so who are these people, these so-called market movers? Are they some secret group in a high-tech boardroom? Let's peel back the layers and actually define who we're talking about when we say smart money. So, at its core, smart money is just capital that's controlled by the pros. We're talking about seasoned investors, big venture capital funds, and major institutions. And in crypto, you've probably heard the term whales, right? That's them. Their trades are just so massive that they can't help but make a splash. And it's not just about having a ton of cash. That is a huge misconception. It's their entire approach. They have deep market knowledge, access to exclusive tools and data, and something most traders lack, strategic patience. And maybe most importantly, they have ironclad risk management. It's the whole package that sets them apart.
Okay, so we know who they are, but so what? Why should you care? Well, this is where it gets really interesting because you can actually use their advantage to sharpen your own trading edge.
Just look at this. The surface of the water, that's all the market noise, right? All the hype from social media, the fleeting trends, it's chaotic. But if you look deeper, down where the smart money operates, the picture gets a whole lot clearer. You can spot them quietly accumulating assets or getting ready to sell, long before it causes a big splash on the surface.
In this right here, this is the fundamental difference in how they think. It's two totally different playbooks. The retail crowd often rides this emotional roller coaster, buying high when everyone's greedy and panic selling low when there's fear. Smart money, they do the complete opposite. They see widespread panic as a discount, a buying opportunity. And when everyone else is euphoric, that's their exit signal.
Okay, enough with the what and the why. Let's get to the how. How do you actually follow these whales? Don't worry, it's not as secret as it sounds. I'm going to give you a simple 3-step toolkit to get you started. So here are your 3 main angles of attack. First up, on-chain analysis. Think of yourself as a blockchain detective, spotting those massive transactions as they happen in real time. Next, wallet analysis. This is like getting a peek into their portfolio, seeing what they're holding, how profitable they are, and finally, you zoom out with capital flow, which shows you where the big institutional money is placing its bets for the long term. Now, you need the right gear for the job, right? Here are some of the best tools out there. For that on-chain detective work, you're looking at platforms like Nansen and Arkham. They're basically the gold standard. To dig into specific wallets, you can build custom dashboards on Dune or use something more user-friendly like DBank. And to track that big venture capital money, CryptoRank is fantastic. Okay, so having these tools is awesome. But let's be real, data is just data until you know what to do with it. This is not about blind copying. So in this last section, let's talk about how you turn this info into a smart strategy while keeping your expectations grounded in reality. Here's a pro tip for adding another layer to your analysis. Always keep an eye on the Crypto Fear and Greed Index. When you see extreme fear, the market is probably freaking out and oversold. And guess what? That's often a signal that smart money is quietly buying. On the flip side, extreme greed means the market is getting overheated, a perfect time for them to start taking profits. And I really need to hammer this point home. Please listen to this. This is not a crystal ball. Smart money gets it wrong too. Seriously, some of the biggest funds out there got absolutely wrecked by things like Luna, or had huge exposure to FTX right before they imploded. Tracking them improves your odds. It does not guarantee a win. Never forget that. So let's wrap this up with your smart tracking checklist. Think of these as your rules of the road. First, use this data as guidance, not as gospel. Second, and this is huge, do not just blindly copy trades one for one. You don't know their full strategy. Third, Combine all the tracking methods we talked about for the clearest picture. And last, but most importantly, always, always, always manage your own risk. Look, at the end of the day, this is what it's all about. It's not about predicting every single move perfectly. It's about being more informed than the average person. When you learn to watch what the smart money is doing, you stop just reacting to the headlines and start anticipating the market. And that right there puts you way ahead of the crowd. Which leaves us with one big question, doesn't it? Now that you have the toolkit, now that you know what to look for, where is the smart money going right now? The tools are out there. Go find out.
Subscribe and visit Web3 Newswire for visibility and credibility of your Web3 projects.